Welcome back, investors, to Ticker Time News. I'm Adam. In Rackspace, ticker symbol RXT is racking up sizable gains after issuing what appears to be an unspectacular Q3 21 report, with EPS edging out analyst expectations by a single penny, and revenue up about 12%. The cloud software company's Q4 EPS and revenue guidance were also merely in line with forecast, making this stock's sharp rally higher look rather surprising. However, the mediocre headline numbers don't tell the whole story, as more evidence emerges that its new go-to-market strategy has Rackspace headed in the right direction. These positive data points, combined with low expectations and an associated 38% dive in the stock since May, are working together to fuel the stock's surge higher. To better understand the stock's move, we have to rewind the clock back to 2019 when Rackspace set its sights exclusively on the cloud market. Are you finding value in this content? Is it helpful, informative, actionable? Then click the first link in the description to become a Patreon member today. Back to Rackspace. The strategy prompted a change in its go-to-market strategy, pushing the company to a land and expand approach. Last year, Rackspace focused on landing new customers and enjoyed particular success winning early-stage infrastructure deals, which feature high-dollar booking amounts. With a foot in the door, the company began helping enterprise navigate their transitions to the cloud through its multi-cloud services segment, which ended up being up 82% in Q3 for revenue. This offering enables companies to determine, manage, and optimize their right infrastructure and platforms needed to execute a move to the cloud. When the calendar flipped to 2021, Rackspace changed course and began focusing on deepening the customer relationship it had established in 2020, prioritizing margins and profitable growth by upselling new services. This meant that sales growth would be dependent upon contracts with relatively small upfront bookings, but with higher profitability. This partly explains why Q3 bookings were down 36% year over year to $200 million. Although the company expects to onboard a large deal in Q4, which will boost its fiscal year 21 bookings to $1 billion. Overall, the shift in Rackspace's go-to-market strategy is having the desired effect as existing customers are ramping up spending. During the earnings conference call, Rackspace CFO described how 3 customer cohorts from 2020 have each grown their business with Rackspace by double-digit rates over the past 4 quarters. Furthermore, the increase in sold gross margins on those new contracts ranges from 200 to 400 basis points. The broader positive impact from Rackspace's business model transition is probably best seen in Rackspace's cash flow performance. In Q3, the company generated $102 million in cash flow from operations, representing the 3rd consecutive quarter in which this metric topped the $100 million mark. It's been a bumpy road for Rackspace over the past 2 years, and the company's lackluster financial results and beaten down stock price reveal its struggles. With its cloud-focused transformation now taking hold, it appears that the company is finally turning a corner. While investors shouldn't expect an explosive in bookings growth in fiscal year 22, stronger margins, EPS growth, and cash flow generation should characterize Rackspace's performance, which could lead to further share gains. Well, that's what I wanted to share with you about Rackspace. Are you invested in Rackspace, or maybe thinking about taking a position? If you are, make sure to buy on weakness. It has rocketed up over the past few days, so maybe let it cool off and then take your position. Let me know in the comments below what you're doing with Rackspace. And remember, your comments make these videos so much better. Now, if you found this video helpful, informative, actionable, then click the like button and share this video so we can all enjoy financial freedom. Thank you so very much for watching. and I will see you in the next video.